What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so don't miss future videos. So I've been exhausted the past 2 days, and I have a clinical rotation today. I'm going to try to get a video for you tomorrow. But this dividend stock is too hot. I have it in my M1 Finance dividend portfolio. I'm buying more, added a percentage a little bit better to where it was. And it has a really high yield. It just hiked its dividend. It's on fire right now. So I know you guys have a lot of requests. I'm going to try to do one for tomorrow. I'm going to do a lot of videos. I'm going to have a few days off after Wednesday. And then Thursday, I have a rotation. So I'm going to get things rolling after Thursday. I'm going to try to get a lot of videos going because things are slowly starting to slow down. I mean, with my clinical rotation, then I have a meeting for the next one, trying to set that up. So it's a little crazy. So let's check out this dividend stock right now. I swear, these kids are a new kid on the block, and they're just hot right now. And I've been buying more. That's JXN Financial. They're sitting at 44.10, a dividend yield of 5.62%. According to Google Finance, a PE ratio of 0.69. Average volume 1.14 million. The market cap is 3.66 billion US dollars. The range is 23.56 to 49.60. Day range is 41.71 to 44.33, and its previous close is 41.84. I actually changed Starbucks percentage one so that I can buy more of these guys. Their dividend hikes are really strong, and eventually, once I get to enough shares, I can start buying more shares of stocks like Starbucks. So JXN Financial is in high regard right now as a dividend stock, especially after the dividend hike. So I'm going to go over these guys briefly. So they're big on annuities. So just for you to understand, an annuity is a retirement product that may provide protected, reliable income when you need it. It can help bridge the gap between the savings you accumulated over time and the traditional sources of retirement income like Social Security. Plus, if you don't need the income immediately, you can let it potentially grow tax deferred. Why annuity may be a powerful addition to your financial plan. So our annuities are flexible, so you can choose options to help your wants and needs. Simple steps will get you started. So decide when you need retirement income, choose a product that's right for you. Customize your plan with unique options. So that's one thing that they bring to the table. But there's also other things that they bring to the table, and that's why these guys are going crazy. So here's a few things that they also bring to the table. So they have other branches, and maybe call them subsidiaries. But all of their businesses are aligned for a common purpose set of values. But the independence and unique culture of each allows us to offer the intimate personal level of service that has been our calling card since we opened our doors. So they have JXN National Life Insurance. They offer products, tools, designed to help Americans plan for retirement with purpose. The National Life Insurance Company of New York. Okay, so that's one thing. The JXN National Asset Management. So it's a investment manager responsible for selecting and monitoring the external asset managers of the JNL funds, a series of proprietary mutual funds and the JXN Variable Annuity platform, and providing the accounting and administrative services for the funds. In addition, JNAM directly manages several risk-based multi-strategy fund offerings available exclusively through JXN products. Then PPM America is a client-focused investment manager, has the experience of substantial resources to provide its clients with investment solutions across markets, including fixed income, private equity, and commercial real estate. However, like a smaller shop, PPM remains nimble, investment-led, and responsible for the opportunities its teams discover together. So here's the thing, okay? They have a lot of things that they bring to the table. So they're making money. Think about it. When you have mutual funds or you have ETF, there's a fee that you got to pay, 0.03 or some percent. So these guys make money that way. I'm assuming that's what they do. Again, this is not financial advice. This is for entertainment purposes, only disclaimer in the description. They have these four things. And the thing that's very attractive is their revenue and their dividend history, which I'll go over. So as a new kid on the block, if I'm going to buy something, I want to look at revenue. The revenue has increased from 2019 to 2021, 3,478 to 8,848. That's in millions US dollars. So anytime I look at a dividend stock, if you're new to this channel, I want to see growth, revenue. I did a previous video on a stock, and this revenue was kind of stagnant. So check that one out. That's why I was turned off. If there's not an increase in revenue, they're not in demand. And these guys are clearly in demand because their revenue is going up. So people are retiring. Baby boomers are retiring. Now it seems like, the government's starting to get involved with people's retirement. Now, like, automatically you have money put into a 401k because people don't really put money away. So I think there's a new law that's out there now, and a lot of companies affiliate with companies like Jackson. I'm assuming that there's companies that affiliate with them because they're a financial services company. They have a lot of funds to help people for retirement, so I'm sure they're affiliated with people with a lot of big bucks stuff. And again, I could be completely wrong, but the revenue trends speak for itself that they're doing something right and they're in demand. So that's one thing that's a pro with these guys. One of the cons are, they're so new. What happens when a recession or a potential recession hits? And since these guys are new, they haven't been challenged yet. So that's one thing that's a con with being a new kid on the block. But I'm going to continue to buy more because I just feel very confident with these guys. And their dividend growth is pretty solid, which I'll go over real quick. So being a new kid on the block, this is what can happen. So 2021, okay, their revenue has gone up from 2021 to 2022 is 50 cents to 55 cents. Okay, it was a little stagnant, but then it jumped to 62 cents. So being a new kid on the block with dividend hikes, this is what really attracts me. I see this stock, this dividend stock, is way undervalued. I see this one as a steal. And again, I'm not pumping a stock. I'm just telling you why I buy it. And this is why I have YouTube videos on my buys, and I provide my rationales as to why I buy these type of dividend stocks like these guys, Arbor Realty Trust, and other dividend stocks, because I have to know what I'm talking about in order to defend my rationales as to why I like these guys. I defend my rationales as to why I buy Zim. Now, Zim, it's kind of like you throw a dart in the dartboard. Maybe you hit the center, maybe you hit it off to the side, or if you see some people in a bar and they have too many drinks in them, they hit the wall and dent the wall. So that's one thing with Zim, is the little bit of inconsistency. But sometimes you got to have one that's kind of a wild card stock that can sometimes do really well and not do very well. But Jackson, revenue wise, it's more consistent. So you want to work for a consistent employer. You want to have a consistent dividend stock that hikes its dividend over time. There's potential, again, not financial advice, entertainment purposes only, disclaimer in the description. There's potential long term if these guys are doing pretty well against the S&P and they keep on raising their price over time for a potential stock split. Now, that's not going to be for a long time with a potential stock split, but I like the trends, and they're a high yield dividend stock. So that's what really attracts me, guys. And this is why I'm really glued on to these guys and buying more. What has me very attracted, and I'm going to continue to buy more. If I can get to 200 to 400 shares, there's some serious dividend firepower there. So that's going to be my long-term goal with these guys, just like I have Key Corp and other dividend stocks. You start getting to 400 shares. Ooh, imagine that with these guys. That's some serious dividend firepower. So I'm just providing my rationales as to why I'm buying these guys. And then don't forget, you get to 200 to 400 shares dividend distribution. Imagine how many shares you can buy with Starbucks stock once you eventually start decreasing the pie distribution on M1 Finance. That's one thing that's going to be very attractive. You start changing the percentage, you start moving things around, you start buying the dividend growth stocks with your high yield, high income dividend stocks. And so far, this strategy is starting to work because I'm getting dividends from my BDCs. Start buying stocks like Tyson and stocks like Dividend, for example. I won't say Altria because they haven't been hiking their dividend effectively. How about McCormick, stocks like that? So that's what I like to see. That's what I want to happen in the long run. So I never have to really touch or put any more money in. I can start distributing that money into my E-Trade dividend portfolio because in the long term, I want my E-Trade dividend portfolio to be the most dominant. That's kind of what I'm doing with Jackson Financial. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I am heavily caffeinated. I'm getting ready for my clinical rotation. After my clinical rotation, I'm going to have a video for you guys tomorrow. So I hope you guys enjoy your Monday. And in the comment section, one, let me know what dividend stocks you want me to review. There's a lot of them. And two, let me know what you're buying today. Take care and have a good one.